From two dirty painters to multiple seven-figure business owners, I'm Redion.
And I'm Karmelo.
I'll be giving you guys the insider secrets to take your trades business to the next level.
From crazy stories to proven strategies, get ready to supercharge your business with us.
Welcome to the Dirty Painters Podcast.
In today's episode, we'll be sharing the top 10 financial mistakes contractors often make in their business. Let's get right into it. Financial mistakes. Avoid these so you don't go broke or you don't have, you're not stressing about money, essentially. Or
So it's been a couple of months since we've been running KLOUDBOOKS and we started KLOUDBOOKS. So we see a lot of distractive patterns that we talked about before, but we keep seeing them coming up. So we want to stress out a lot of those mistakes. So you can identify them by listening to them here, and then you can try to fix them, avoid them. That way you're not bleeding money. Very, very common mistakes that a lot of contractors are making out there. So that's why we came up with the topic. We're going to go over it again.
Let's start off with number one, poor budgeting. Failing to create a detailed budget for projects can lead to overspending and cash flow issues. We've done this mistake before too. We're really guilty of ourselves of that. I wasn't really doing the math of the expenses for projects in my head, and I was thinking, oh, whatever, if I get 2-3 gallons, it is what it is. But at the end of the day,
So I'll give a better example because I'm sure a lot of you know that Florida got hit by 2 hurricanes back to back, and we kind of had to pivot our business a little bit to a lot of our previous customers that we serviced the last few years. They got flooded, they got a lot of water damage, they got a lot of drywall, they need to replace their doors, they need to replace a lot of things. So they're calling us back like, hey guys, can you assist us with that? So we kind of had to shift our focus a little bit from just fully painting to just assisting our customers so they can get back into their houses faster. And then we're pretty much demoing everything, doing the water remediation, killing the mold, and then putting the drywall back together, installing baseboards, installing doors, pretty much putting the place back together, which are big projects. And what we're offering our customers, we're giving them one price that includes materials. For example, we're doing a $100,000 project that includes materials. So how can we over budget or can we burn ourselves is by underbidding or undercutting ourselves. How do you want to say it? And underestimating how much materials can cost. So for example, that $100,000 project has a $30,000 material budget. We have to make sure that we account and calculate every single thing to the smallest detail. Like there's 25 doors, we're gonna need 25 door handles, we're gonna need 25 times 3 hinges, we're gonna need all those things, and then we put the spreadsheets together and we calculate exactly how much material we need. We figure out how many drywall sheets, how much material to do the drywall finishing, to the smallest detail. We create the spreadsheets. That way we protect ourselves and we're also fair to the customer, and we're not over budgeting and we're not overpricing because our calculations for the materials were wrong. That's one way. That's why I came up with the number one, because we're actually experiencing that firsthand right now. And a lot of these contractors, they don't go to that attention to detail, calculating and going on the website and looking on, for example, at Home Depot, how much 6 vanities are gonna cost you, how much the flooring is gonna cost you, how much the baseboards. They just wing it, and then that can have catastrophic results. You can either lose money or you can lose the job because you over budgeted for materials.
let's move on to number two. Inadequate record keeping. Not keeping accurate records of expenses, invoices, and receipts can result in financial disorganization and potential tax issues.
So I'm gonna start with stressing out an issue that has come up recently and we see a lot of our clients dealing with. So I'm assuming all you contractors and painters out there, you have workman's comp. When you have a workman's comp policy, your workman's comp, even general liability. So general liability and workman's comp, they'll audit you every year to make sure you're paying enough for the coverage that you require, even if you're overpaying or you're underpaying. If you don't have contractors that have their own insurance, they have to make sure those guys are covered under the policy. So they look into all those things. What I see happening, a lot of painters, a lot of contractors, they don't have any records. They're so disorganized. They don't have their W-2s. They don't have the 1099s up to date. They don't have the payroll, the pay stubs. They don't have the workman's comp exemptions from the contractors, or they don't have the general liability from the subcontractors. all those things, and it's a big mess. So what's the result of that? The workman's comp and the general liability company, if you cannot provide that paperwork, that information to them, they're gonna raise your premium, or they're gonna give you a flat price. For example, I remember the first year that we had workman's comp, and I didn't know about all this. I'm telling you guys right now. I was like, fuck it, I'm not gonna keep track of everything. I didn't know I had to keep track of everything. I didn't know I was gonna get audited by my insurance, so I didn't have anything. And then they charge us $17,000 on top of what I already paid for the year, just because I could not provide the records, and I still needed the coverage, and I still needed my policies. So how do you become proactive? You keep your bookkeeping in order. You keep all your guys, your subcontractors, their pay stubs organized, and also you keep all their certificates of insurance, workman's comp, general liability, or workman's comp exemptions in order. So when you create, for example, a cool feature that CloudBooks has, you categorize all your subcontractors, you categorize all your employees, and then all that information populates in that ecosystem over there. And then you have their general liability policy, their workman's comp exemption or policy. You have their pay stubs, you have the checks that you write them, you have the transactions that you do. And then when the insurance companies ask you to provide that information, it's just so simple. Everything is populated in the same platform. You just download all the PDFs and you just send them, and that's it. Your premium stays the same, or it might get adjusted, depends on the paperwork that you send, but you're never gonna run into an issue like we did, paying a $17,000 pretty much like a fine. It's not a fine, but in order to keep your policy active, you have to pay that. So stay organized. Use a bookkeeper, do your own bookkeeping, use CloudBooks, whatever it might be. That's gonna save you a lot of money in the long run and a lot of time, instead of like all of a sudden you're getting audited and you're trying to scramble and spend hours and hours trying to find all that paperwork that you need to provide.
Number 3, neglecting cash flow management. Ignoring cash flow can cause contractors to run out of money for essential expenses, such as payroll and materials. We've discussed cash flow, how to combat it, the deposits, getting creative with it on bigger projects. But also, you can also utilize those commercial accounts that are net 20, net 30, that can help you cash flow the job a little bit better. But don't forget, you still have to pay for that 20 or 30 days after.
So by being organized and knowing your financials at all times, you keep a pulse on your business. And how do you keep a pulse on your business is by how much money goes in and how much money needs to go out. You always need to know, especially when you have a bunch of projects running at the same time, that's where the deposits come into place. You need to have the customers cash flow the projects by asking for deposits or doing the payment terms. Otherwise, if you're trying to cash flow those projects by yourself and then your terms are not met, you're gonna run out of money. You're not gonna be able to pay your guys. You're not gonna be able to pay your vendors, your suppliers, Sherwin-Williams, your material stores, and then your bills will be due, and then that's when shit hits the fan. That's why you have to be proactive and you have to be organized and know at all times how much money you need for the business to survive. Or calculate your overhead, look at your expenses, project and forecast expenses that you're gonna have at projects. Going back to number 1, to poor budgeting. Make sure you don't budget poorly, so that way you're able to forecast and project what your expenses will be on each project. Make sure you have enough money for each project. A good way, especially with the bigger ones that we're running right now, the bigger projects, like 6-figure projects, a good way that I like keeping track is I create a whole job site spreadsheet for each job. So I'm like, okay, this job, I got a $50,000 deposit. These are my expenses. This is my projected payroll. These are what I'm going to pay out to my subs. This is how much I need for materials. And then I kind of separate. I mean, the money goes still in the same bank account, but let's say we have $300,000 in the bank account. We're like, that $50,000 is for cash flowing Karmelo's project. That $60,000, 30, whatever number is for this project. And then we keep track. We do that job cost analysis at all times. That way we don't run out of money. And also I don't like dipping from other projects to cash flow another project, because how many times have we seen contractors that they do that? They get deposits, they start a project, they run out of money on that project, and they start another project to get the deposit. That way they can cash flow
the other one,
try to finish it, and then it's
chaos,
literally. And we've seen it. especially in Michigan and down here, we've seen it so much. Contractors operating like that. That's why the best way is each job, it's its own ecosystem. And then the money that goes in from that job, it's only there to satisfy and fulfill the needs of that job. That job is not gonna pay, my remodel is not gonna pay for the kitchen cabinet to get done. Very important to separate and kind of keep an eye on each project. And then on your terms, if you're running out of money on a project, you have to ask for more money, or you have to work faster to finish it to get paid. It keeps you also on track. It keeps you motivated to keep going and finishing projects, because our number one rule is we don't want to start a project and then let it drag out for weeks and months, because the money won't come in until you finish the project. Very important, I think.
Number 4, underestimating project costs. Contractors often underestimate the costs involved in a project, leading to reduced profit margins and financial strain. It's a little bit close to poor budgeting, but an example I would like to give. So if I'm estimating something and I think the materials are going to be anywhere from $1,500 to $1,800, I like to add a little bit of room for error, like $500 or something like that, because you're never going to be exact on your calculations.
So a very recent example, I almost fucked up big time. We're doing a big remodel, putting the place back together, and it has like 46 something doors, which they got destroyed. We have to get new doors. We have to get everything. So I went to Home Depot website and I looked at doors. I'm like, oh, $80 a door, 46 times 80, add like 10%, 15% for taxes and transportation. And then I came up with the price. And then I double checked my numbers with my dad. And he's like, dude, you don't only need doors. You're gonna need the whole case, because the cases were rotted. We're gonna rip those off. You have to put new door jambs. Then you need the handles. You need the hinges. Those will need adjusted. And then he's like, go back, look at the prices of those, and then come up with how much you're gonna charge for those doors. So I ended up being like, out altogether, the bundle per door was like $260. So I almost shot myself in the foot. I made like a 3x mistake. 4x. So those are the things that I very recently, like a couple of days ago, it could have went wrong. And also I presented the price to the customer. He'll be like, and then I had to change it. He would start second guessing. I would look like a dumbass pretty much, I think.
Yeah,
if I told him like, oh, from $80 now the doors cost $360. He'd be like, dude, how do you?
That doesn't make sense for him, because it feels like you just said that price so you can get your foot in the door and then start charging more.
So that's a very recent example. Or again, I'm not good at estimating all these big projects, so I'm learning. That's why it's good to have our dad, who's been doing this for 35 years, to like double check the prices. So after we cut the drywall, I didn't account for the texturing that was gonna take, the plaster. That was another, not hidden cost, but I could have very easily skipped it, and then it could have been like a $12,000 mistake on that particular job that I'm talking about. So those are like, make sure you oversee everything and you account for every little detail. And if you don't know, reach out to somebody, or hopefully someone in your immediate circle, or you can even send us a message. We'll be like, hey, dude, this is something that you overlooked. Make sure you account for this, because those mistakes will add up big time. Or same job, another mistake. I didn't know the price of Kills. Kills is like almost $200 of a 5-gallon bucket. So I was like, oh, Kills is probably like Pro Black oil, probably like $15 a gallon. That's something that I didn't account for. That's why you have to go on the website. You have to reach out to your distributors and double check the prices before you do your calculations and present your price, because you don't want to be slimy and trying to adjust your prices after you get the project.
Number 5, mixing personal and business finances. Not keeping personal and business finances separate can complicate accounting and tax filing, as well as make it harder to track business performance. A lot of people, when they use their business debits or credit cards, whatever, for personal use.
So the most recent example that I could come up with, I was looking at one of our clients' P&L, profit and loss statement. The guy was paying his car payment, which is a Sport Coupe sedan, which is clearly not a vehicle that you use for painting. He was paying that car payment with a business account, and he was making it an expense. Part of our job with KLOUDBOOKS is asking you questions like, hey, what's this expense for? What's this? Is this for business? We kind of keep you on your toes, making sure everything that you're logging or you're spending or every time you swipe your card, it makes sense. So the guy's like, yeah, I thought it was just the vehicle I use for personal use. And I'm like, no, knock on wood, you get audited, and next thing you know, they look at you're paying for a 2-door sport coupe car with a business account and you're claiming it as an expense. That's big trouble right there. That's one example I can think of as of right now. Just keep separate. Cut yourself checks or do draws or whatever, however you're structuring your business. Again, we're not experts in telling you how you're going to structure your business. But for example, us, we pay ourselves, we are on payroll, and then we do draws. And then once you take your draws, then you pay your personal expenses, your mortgage, your rent, your groceries,
Utilities, whatever.
Utilities. Or another thing that can be very common. Actually, I did it myself because we buy office supplies from Amazon. And then I have a business credit card on the Amazon account that I use. And then I have my personal Amex credit card that I buy stuff. And then I realized that I was charging the business credit card for buying random shit.
Water cases or whatever.
Water cases for the house or, I don't know, razor blades, random stuff. I was like, oh shit, I've been paying this with a business and I've been making it an office supply. So that can cause trouble down the road. I didn't realize I was switching my credit card. So that's something that you have to keep attention to. And then until our bookkeeper was like, hey dude,
why are you spending so much
why
on
are you
Amazon?
spending so much on Amazon?
What are you
I was
getting?
like, oh fuck. Yeah, you're right. I was like, I have to switch my credit card. So that's a common mistake that I did myself recently. And I just figured out when my P&L was sent, and then he was like, why are you spending so much on Amazon? I was like, am I? And then we realized that I've been buying a lot of personal stuff with a business credit card because I'm not switching the option for payment.
Number 6, failure to invoice promptly. Delaying invoices can lead to cash flow problems as it takes longer to receive payments from clients. It's a big convenience having an app on your phone where you can send them an invoice and they can pay with a link right there and there, other than just going back to your office, sending the link, and then they just get carried away and it takes days. Then it moves on to the weekend. Then you have to wait Monday or Tuesday for anything to go into your account. It's the convenience of invoicing promptly is...
A lot of people don't understand that they lack on collecting money. It's a very common thing that we see all across the board from everybody we work with. They open up invoices, they don't get paid, they get busy, they forget about it, or especially owner-operators that are still in the field and they don't have an office, they don't have an accountant, they don't have a bookkeeper. And then there's so many open invoices and there's so much money uncollected because a lot of times customers, they don't pay on time. I mean, not a lot of times. I would say 95% of the time, they don't pay on time. And, we have to ask for it. You have to go out there and not chase your money, but remind people hey, everything good? Did you receive the invoice? Did you pay it? Are you having trouble? Do you want me to come collect a check? Excuse me. Do you want to do a wire? Do you want to do credit card? A lot of times you get busy, you don't have the time or you don't have the patience, or you're like, oh, I'll do it tomorrow and I'll do it tomorrow. I'll get to it. And next thing you know, you have $15,000, $20,000 in open balances that need to be collected. And then your business is struggling for cash flow. You need that money to get going. That's why it's important to keep track. And also, there's platforms like the ones we use that they have cool features. So you can set automations. So let's say I generate an invoice for Karmelo that I finished his job today. I'm supposed to get paid today, but let's say Karmelo
takes a nap.
Yeah,
long nap.
Yeah, went to Antarctica on vacation and he doesn't
Hibernating.
have service. He's like, oh, I'll pay you when I'm back from Antarctica. I'm like, okay, whatever, that works. So the platform, it's gonna make the invoice due, and then it's gonna make it overdue. So what it does, it says automations. Like us, we are annoying. We'll set 3 automations a day. But you can be more or less annoying. You can say 1 a day, 1 every 2 days. And then also another cool thing that it has, it shows you how many times they viewed the invoice.
Especially when they say, oh, I haven't seen it yet.
Exactly. So I'm like, the more you look at it, the price is not going to go
lower.
down. And then you decide to exit. But that's another cool feature that our platform has, that it sends reminders to your customers, because you have to collect that money in order for the business to be moving forward. Even if you have a big cash pile sitting in your business account, remember, each project is its own ecosystem. It has to be, we have to close out the project and then move on. Otherwise, if there's money pending on the project, we're not gonna we need our profit pretty much. We need our profit and we need to cover our expenses. We're not gonna use other jobs to cover the expenses and the profit from the job that's due.
Yeah, I was really bad at this, invoicing people promptly. I would just, be a good guy and just let them be with their own time. But I didn't realize it was hurting us stress-wise on the cash flow end.
Yeah.
So right now I'm just like, it's deposit. Yeah, I have to get it today. Like, you can't get it today to me. Sorry, I just have to keep going. It's like, I can't just be waiting for you.
Yeah, then we tell them, do upon completion. And we make it very clear, once we're done, I mean, you don't go to a restaurant and you eat and then you're like, oh, I'll pay you in 40 days. It's the same thing, right?
Send me an invoice.
Yeah, but like,
I'll have a check in the mail.
I'll come back and I'll pay you. No, it's the same thing. I don't know. A lot of times people think contractors, they can wait for their money, but no, that's why you make it clear. Like, hey, we have expenses, we have costs, we need to cover our costs, we need to pay our guys. Just be all open and honest with them. And if they don't respect that, then I don't know, man. You don't want to do work for those guys.
Yeah, the more clear, concise, and confident you are when talking about money, the easier it will be collecting those invoices.
Correct.
Because you're a veteran at that point. You're very experienced when you're talking about money, because a lot of people are really shy also, talking about it.
Like, for example, like one thing that Karmelo had was he was shy about asking for money. I'm like, dude, it's your fucking money.
Yeah, it's okay.
Yeah, I'm like, it's our money. You have to go ask for it. So, and it's not only him. I used to be like that. I was very shy and very like, I didn't want to talk about money, but it's a transaction. You have to be able to bite the bullet, talk about money. Even on the sales process, a lot of you don't talk about money. And then you don't talk about money once you finish a job. So just stop being shy.
Yeah, on your appointments, I'll always lay out the payment terms. Like, these are payment terms. If we're starting on Monday, need the deposit Monday. If we finish on Wednesday, once we have the final walkthrough, I'll need the final payment.
And then kind of it's like the cool down process that we have on the 10-step sales process. The cool down is you reassure them what they got, then you explain the payment terms, you explain to them what's next, you explain to them like, hey, I'm gonna come collect the deposit, I'm gonna do the call consultation. So that's kind of your cool down. You have to insert it after you close the deal. You have to insert on the cool down all your payment terms. You cannot start a project and not have a deposit. That was another mistake that we used to do. It would start a project and be like, oh, I don't have a deposit today. I'd be like, oh, okay. And next thing you know, we're 3 days in the project. We bought all the material and I still don't have a deposit. So now we make it very clear on the cool down. Hey, next step, this. We can't schedule you until the deposit hits. We can't do the call consultation until the deposit hits. Guide them through the whole process from the estimate to scheduling, closing the job, scheduling, payments, when you're expecting to receive payment. Don't just assume that the customer knows that once you're done, they're gonna pay you. That's why we give them. That's why another thing that we do well, I think, it's the constant communication. Like, hey, we'll be done in 3 days. Or here's what point we are right now, or we'll be done tomorrow or 2 days prior. You always end up like, how are you going to be paying your remaining balance? Check, cash, credit card, wire. That way you kind of prepare them so they're ready. Because a lot of times we would finish projects and there was a big balance due and be like, oh, I don't have a checkbook. Oh, I didn't know you were going to finish today. Oh, I didn't know you needed to get paid once you finished. And you're like, well, now, from now on, we're going to keep it constantly updated. Once the job is done, you better have a check.
Number 7, not setting aside for taxes. Contractors sometimes overlook the importance of setting aside money for taxes, which can lead to unexpected liabilities.
And that's something that we used to do when we first started and we were broke.
We were getting surprised by the big tax bill every year. We're like, oh, no.
It would be like, oh, fuck. I got paid this much in taxes. I thought it was all the money for me to keep. And then a lot of you run into those issues. The best way is to pay your taxes like us. We pay our tax dues every single month. And at the end of the year, I don't have to write a big check, which is gonna take a hit from my cash flow. It's better the way that we're doing it right now, and it eases off a lot of stress, and you don't even think about it because like, oh, I'm making my, let's say, I'm gonna say a random number. I don't know, like a small business, probably like $5,000 a month or for your taxes. So you make that payment, and instead of doing a lump sum payment with penalties, you just do it at the end of the year. The next thing you know, you're like, oh, you empty out your whole bank account because you have to pay your taxes.
Now you're stressing.
Now you're stressing. Versus when you account your tax payment every month as your overhead cost, you kind of go into a mode. You're like, okay, I have to hit certain amount every month to cover my overhead, cover my taxes. So you treat your taxes kind of as a monthly bill because your biggest expense sometimes will be your taxes. And that way you ease it off from the stress, and also it's easier when you're just making like installment payments every single month. It's the best way, I think. Either monthly, I highly suggest it. That's how we pay our taxes. We pay them monthly. Or if you don't want to be doing monthly, do them at least quarterly. Every quarter, do a tax payment. Depends on your business needs, but even if you're starting out small, I think that's the best way to do it. Even if you're like a one-man show, $100,000 a year gross revenue, still make sure you make your payments quarterly, monthly, whatever is best for you. Consult with a CPA and then come up with the best strategy plan for your business.
Number 8, ignoring insurance needs. Not having the right insurance coverage can result in significant financial losses in the event of accidents or unforeseen events.
Very recent that I had to check my insurance policy for myself. So we're expecting for our shop to like literally get destroyed by the hurricane. And we have probably $150,000 worth of equipment in our shop. So I was like, okay, let me check my policy, see if, knock on wood, next thing you know, the hurricane blows away our shop. What am I covered at? So that's a very recent example. You check for your damage, your theft, your flood. We didn't have any flood insurance. So I was like, oh, fuck. If the shop floods, our equipment is fucked. Now I'm adding flood policy for all my equipment. So you call your insurance, depends on where you are. A lot of you probably are not even in the state of Florida, but no matter what, you make sure and see and assess how much your equipment is valued at your shop, your work vehicles. Do you have comprehensive insurance? That's another thing. We're worried about our work vehicles, our vans. Are they gonna be covered if they flood? Make sure your commercial policy is comprehensive and covers theft, fire, whatever things, unforeseen things can happen for your equipment, because it can set you back big time. Let's say we lost all our sprayers and we don't have any money to buy new sprayers, and we lost our vans and we lost our trucks. Then what? How are we gonna go to work next day? And I can look back into an example. It was not our business. We used to work for this guy, and then he had a shop which caught fire back in Michigan. So the shop caught fire. They lost everything. The guy didn't have insurance policy. So how he was doing, he had to make money. So how he was doing, he was buying shitty sprayers from Facebook Marketplace. They were just using it. They were burning the sprayer out until they came up and then started making some money. But he literally lost everything from a fire in his shop. They didn't have sprayers. They didn't have vans. They didn't have the ladders, nothing. Everything was destroyed. And then he didn't plan for something like that happening. And then he was telling me it was a struggle for like 6-7 months with no equipment, projects lined up. It was a big struggle for them to be able to come up ahead. And then that's how he did it. He was going on Marketplace, buying shitty things with whatever little cash he had, finishing a job, getting the money, then buying some more equipment. And then for 7 months, they were struggling big time just to make up and then recoup
Whatever they lost.
whatever the equipment that they lost. I read this book. It's called Your Next 5 Moves. You always have to be able to have your next 5 moves calculated, even for worst case scenario or best case scenario. And a lot of people are like, oh, don't always think positive, always don't bring. I'm like, no, dude, that's bullshit. You always have to think of the worst case scenario. If shit hits the fan, are you gonna be prepared for it? And that's a little side note. Stoics and ancient philosophers always talked about negative visualization always be prepared about negative things that there's a high probability that they're going to hit you with. So instead of like panicking and then losing it and not knowing how to act, you already prepared because you already thought of your next 5 moves if shit went wrong. Like, for example, like one thing that I think of, like, what if Instagram and social media goes away, which is our main lead flow, getting jobs, getting customers. What if that goes away? I'm prepared to pivot and then find the next thing. How we're gonna get jobs because the business won't stop. Or I was prepared if we lost everything. I was like, what are we gonna do? All our equipment? I was prepared to be able to get back to work the next day. I think it's one of your duties as a business owner to be prepared, because it's not only you, but then you have your crews, you have your people in your organization that rely on you, you have your employees. You cannot let those people down. The bigger your organization, the more responsibility you have, not just on yourself, but on everybody within the organization.
Yeah, as a leader, you need to have contingency plans for whatever happens.
Correct.
Number 9, lack of financial planning. Failing to plan for long-term financial goals or retirement can leave contractors unprepared for the future.
Especially if you're an owner-operator. And how many people do we see that they're like in their 50s, 60s, and they're still out there painting with a paintbrush, living paycheck to paycheck? So many.
A big majority of the market.
Big majority. Here. And that's why we're blessed that we found our business partner, Shadi, because he always talks to us from the very beginning. Even when we're like dead broke, he's like, dude, you have to plan ahead. You knock on wood, you get hurt. You cannot paint, or how long you're going to be able to paint. You have to plan retirement plans, mutual funds, whatever it might be that you need to start putting aside. Or you need to have an exit strategy. Going back to what you just said earlier, next 5 moves. You need to forecast and project 2 years down the road, 5 years down the road, 10 years down the road. Do you have an exit strategy? A lot of you have big organizations that you can sell. Is that something that you're considering? Or do you want to just bust out and then crank out like a couple mil of work for like 5 to 10 years and then maybe get into real estate, passive income? What's your exit strategy? What's your financial planning? Are you putting money aside in case you can't paint anymore, pretty much? That's how we switched our thinking, and that's why it plays a big role to have people that are financially educated and then understand those things in your corner. That's why we say, like KLOUDBOOKS, you have a virtual CFO that can guide you and tell you all these things that you need to know as a business owner, because you have to look in the future. Because a lot of painters, a lot of contractors, they have no exit strategy, even like with big businesses, or they have
no investments,
nothing. They're just living paycheck to paycheck. And then contracting, painting, contracting, whatever you might be, the trades, it's a good way to make money. There is a lot of money in the trades. But if you're not financially educated or have like the basic understanding of how money works, you can rip through that money really fast. And next thing you know, we take a hit, there's no work out there, what are you doing? Or construct, like for Greece. That's where we came from. Greece went to hell. It was flourishing. Our dad was making a killing, so much money, but he never really thought that work was gonna stop. They never really thought that construction was gonna stop in Greece. Our dad was thriving. He had a big construction company there. I would have never left for the United States if my dad kept going how he was going. But next thing you know, Greece bankrupts. Nobody cares about building anymore. Nobody cares about renovating. My dad never invested in anything. He never thought about him not having money. And the next thing you know, work stops, and the money stops. There was nobody was working construction in Greece for like what, 6 years, 5 years?
8.
Like a long stretch, because my goal was like, eventually go work for my dad. And then shit hits the fan. I was like, you know what? I'm out. And that's when I decided to leave. That's a prime example of something like that can easily happen here as well. There might not be work. What are you doing? Are you prepared for that? Or you're just going to struggle? That's something that a lot of you need to look for unforeseen circumstances, planning financially for the future as well.
And finally, number 10, over-reliance on a few clients. Relying heavily on a small number of clients can be risky. Losing one or two major clients can significantly impact cash flow. By being aware of these mistakes, contractors can take proactive steps to improve their financial management and ensure business success.
I see it a lot with commercial painters and like the painters that have these big contracts. Either it might be a government contract, commercial building, a contract with Home Depot, or like Publix, or like every time they open a new store, you go paint it. That can end like this. Or I've seen it happen, apartment painters that were making a killing with one complex or two complexes. Next thing you know, another painter goes in, underbids them, and then guess what? All of a sudden he loses the contract. Like, dude, you're done, you're out. There's no loyalty in our industry. So you cannot rely on those big contracts. Grow your business, work. You cannot rely on them always being there. That's why it's important to have multiple avenues, different channels of work coming in. I see it with general contractors as well. They rely a lot on the word of mouth and that one client that is an investor and buys properties and then uses them for everything. I'm like, what if that guy all of a sudden doesn't buy properties or he has no work? What you gonna do? You have to think of that, especially if you have crews and you have employees. How are you gonna keep those guys busy? You have to have different means of work coming in, no matter what. And that's something that that's why we diversified our services a lot. We do cabinets, we do interior painting, exterior painting, and we talked about in the past a lot on why we started doing cabinets, because in Michigan, winter was very harsh and people didn't want to paint. Obviously you cannot paint exterior, but work slowed down significantly. So we're like, okay, we need to add another service that it's less invasive, but it can also provide a lot of value. And that's when we started doing cabinets. We're like, okay, we'll add another service. And that's when we're like, okay, now we can finish drywall for you. We do drywall repairs. We can add baseboards for you. We can do texturing. We can do backsplashes. Everything that we can cover without a general contractor license, we're able to do it because we cannot rely on only one income channel. It was very important for us. And same with now, unforeseen circumstances. I'm sure exterior painting, cabinet painting is gonna significantly slow down because people, they care about going back in their houses that flooded. So they don't care about cosmetic stuff anymore. So all of a sudden from a want, it turned to a need from our customers. So we have to be able to satisfy their needs, whatever it might be.
I think what you said that was really important was diversifying your clientele, not just relying on one type of client, that specific avatar. I've seen a lot of people that they work with GCs, which they're, like you said, loyalty is not in this industry. If they're looking for somebody cheaper, they're going to replace you.
Or you cannot rely only on one designer. You cannot only rely on one GC. You cannot only rely on one commercial contract. You cannot only rely. I know painters who make millions painting Publixes, Targets, but let's say Publix goes bankrupt, and next thing you know, there's no more Publix, and they're not opening new stores. What are you gonna do? You have to be able to diversify and then be able to pivot really fast. Like, remember when I told you I met that guy in Texas that he was buying a private jet? So the richest painter I've ever met in my life, I met him in Texas at a strip club. The guy was an absolute killer. So he had the biggest painting business I've ever seen in my life. And I fact-checked it, I looked him up. The guy was a heavy hitter. So he started a painting company, paint slowed down, and he's like, dude, I had 60 employees I need to keep busy. So we had to figure out what to do. So he started adding drywall. He started hanging drywall. He started finishing drywall. He started doing a lot of other things besides painting. And all of a sudden, he started gaining a strategical advantage from all his other competitors. Like, oh, you can finish drywall, hang drywall, and paint? And he started getting big contracts, commercial contracts. And next thing you know, the guy was doing $140 million in paint and drywall a year. And he exited that company he didn't tell me an amount, but he said a lot of money. And for context, the guy was in Texas buying a private jet. It was like a $50 million jet. So I'm assuming he made some coin from exiting his company. But that's a good example of him pivoting and adding more services into his arsenal to be able to not undercut the competition, but make it more convenient for a customer, because customers like dealing with only one person. And then that's how I win a lot of bids. Like, hey, you're not gonna deal with 7 different trades or 7 different project managers or 7 different companies. You're only gonna deal with me from start to finish. And I take full responsibility for timelines. I take full responsibility on finishing on time. I take full responsibility on all the work being done properly. And then customers, they appreciate that. And then like, oh, there's less risk with going with this guy, because we're going with 7 different people, and we see it a lot because we don't win everything in every project. We run into a lot of backup. We run into a lot of quality issues. We run into a lot of people fucking up our work, and the customer having to go to call us back and pay us again, because we're not gonna go fix it for free because the electrician or the flooring guy fucked up all the walls, and then they have to get repainted. So that's why we tell the customer, hey, we are the less riskier option. We might not be the cheapest, but we are the less riskier option, because this, we eliminate it. And the customer's like, oh, I'd rather pay a little bit more money to go with these guys than take a risk and then coming back and biting in the ass with going with 7 different trades. And that's how we're winning a lot of our projects right now, that we're starting them, from drywall all the way to finishes. People are like, I'd rather just work with you. And then, because like we said before, if we say it's gonna be done in a month or 3 weeks or 2 weeks, we get it done no matter what. Even if me and Karmelo have to go back on the field and work 16 hours a day, if we promise the customer it's gonna be done in a certain timeline, it's gonna be done no matter what.
Yes, a lot of scheduling issues when you go with some general contractors that they have to schedule different trades.
Yep. And
just recently we had the project that's down here in South Tampa that we went to yesterday.
Oh, yeah.
Yeah, just we're going back for touch-ups for stuff that was supposed to schedule before us, but
yeah, we finished everything, and now we have to repaint pretty much every wall in the house because the flooring guys sanded it and then fucked up all the walls, the trim, and then I'm like, that's my warranty doesn't cover that. And obviously the customers know that, but sometimes you have a lot of customers expecting for you to just go and touch up everything for free, especially builders. They're like, oh, can you come and touch up everything? That's why we don't do any work with those kind of builders. I'm like, dude, once I finish the job and I deliver it and it says completed, it's done. Every time I have to step back, my meter is running.
I think that will wrap up everything for the top 10 financial mistakes some contractors do.
So this will wrap up this episode of the Dirty Painters podcast.
Be sure to follow our business on Instagram at Olympian Painting, and also our personal pages, Olympian_Redion, Olympian_Karmelo, and keep up with the episodes of the Dirty Painters podcast.
Also follow KLOUDBOOKS, guys. And if you like this episode, be sure to share it with a fellow painter or tradie. Until next time, this is Redion.
And I'm Karmelo.
Signing off from the Dirty Painters podcast.